the SMEs market has been hugely underserved. This has created a massive gap that new entrants are now looking to fill. On the 8th of March, Quickbooks, an accounting software provider for small businesses, partnered with the payment-as-a-service platform Modulr. Modulr will provide Quickbooks with the payment infrastructure required to offer payments accounts for small business. The announcement comes only a few days after Tide, the UK leading digital business banking platform, declares that they will roll out a payroll suite. And recently, Zeller, the business banking startup for merchants and growing businesses founded by former Square executives, raised $25 million. That the competition in the small medium-sized enterprise, SMEs, market has shifted gears. Challengers understand that SMEs' most pressing challenges goes beyond banking. So by taking a customer-centric approach and adopting adjacency growth strategies, both the platform providers like Tide, Square, or Shopify, and accounting package providers have started to offer services that compete with banks. These companies provide SMEs with a full end-to-end embedded workflow. Moving away from the traditional siloed products approach, they understand that SMEs want an integrated and seamless journey where all the key business aspects like financial management, distribution, and marketing are integrated, and where critical business issues like getting paid or paying are easily tackled. As a result of this mindset shift, both platform and accounting packages providers are taking over some functionalities traditionally offered by banks, such as account provisioning. To be fair, even though SMEs are often seen as the backbone of the economy, accounting for 99% of all UK private companies and 60% of the workforce, the SMEs market has been hugely underserved. This has created a massive gap that new entrants are now looking to fill. Some recent statistics highlight this gap. For example, 1. According to McKinsey, 74% of an SME's time is spent on activities that don't relate to revenue generation or product/service delivery. 2. According to Quickbooks, 75% of Britain's self-employed workforce use personal bank accounts for all their business transactions. 3. According to Tide, UK small businesses collectively spend up to £1.7 billion each time they run payroll for their employees, part-time and casual staff. Unfortunately, the SME situation is no different in other parts of the world. In the Asia-Pacific, 30 to 50% of SMEs are open to switching primary banking relationship. Banks need to address this gap because the SMEs market generates a significant portion of their revenues. McKinsey reported that SMEs generate around $850 billion of annual revenues for banks, a pool expected to grow by approximately 7% annually over the next 7 years. Similarly, in the United States, Oliver Wyman estimated that the US small business financial services revenue pool accounts for $110 billion, but 41% of this revenue could be at risk. According to Celent, platform providers are already targeting at least 80% of these revenues. Accenture went even further and reported that in the UK there's an additional 1.6 billion in annual fees that could be captured. And let's be clear, if banks don't jump on that opportunity, someone else will. Banks still hold two strong assets to address the SME segment. One, trust, which is crucial in time of crisis. And two, the ability to deploy high-touch customer service. However, to retain their revenues and truly seize new opportunities, banks need to adjust their operating model. Here are my 4 tips to achieve that. 1. Think beyond banking. Banks need to focus on SMEs' business flows as opposed to banking products. For example, they should think about how they could support SMEs in moving their business online, as DBS did in Singapore. 2. Digitalize key processes, such as credit applications, and make sure SMEs' requirements are part of the bank's digital agenda. Usually, the focus is more on the retail market, which has different requirements. 3. Partner with SME specialists, like Bankify, to fully understand the market needs. These partners have the capability to rapidly integrate within the bank ecosystem and deploy new innovative product propositions. And 4. Finally, at the risk of sounding like a broken record, implement agile, modern, and open payment infrastructure, which will enable a digital-first approach. To conclude, COVID-19 has put the SMEs market, really seen as the social fabric of society, under the spotlight. This trend, along with digitalization of the economy, brings some major opportunity for banks. Today, these opportunities are untapped, but tomorrow they'll be gone. So the time to act is now. Is it going to be easy? No, but that's why my team and I are here to help. Please feel free to contact us.